small bar on 29, and then we had another small bar on 30. And to me, I was wondering if 12 was the first push up and 21 was the second, and that we're working on a third push up, and if the bears might be seeing this as a two-legged move up and a wedge bear flag. So I was hesitant to buy up here. 30 is a high one. The last pullback in the 23, 26 area was barbed wire. Subsequent pullbacks tend to get weaker, so I'm assuming this is going to be weaker. So I think that this high one will not go very far. Also, I mentioned that the measuring gap between the high of 20 and the first pullback, the low of 29 or 30, is 4 ticks, and that's a lot given the size of the bars. You know, that just looks like too big a measuring gap. So I think the market should come back into the gap. So I'm not buying above 30, even though it's a high one. And then we've got an inside bar at 32. I personally placed an order to go short at its high, and I was going to scale in higher because I thought we were getting a tight trading range here, and even if the market broke out, it would come back. And I chickened out on the double bottom attempt on 34, and I got out with, I don't know if it was a tick or two profit. I would not buy the high 2 at 35. I think that the market's probably going to come back into that gap. Also, we're getting close to the trend line, so we should test that as well. Failed high 2 at 36. Shorting it, I think if you're going to do it for a swing, 2 to 4 points, it might be okay. But I think it's basically a 50-50 trade. You're trading a breakout of a tight trading range, so I wouldn't do it for a scalp. And unfortunately, you're trading counter trends, so you know, you may have to sit through pullbacks. Okay, 41.42 is a 2-bar reversal, third push down, double bottom bull flag with 25. And at this point, I was off trading notes on that report. I mentioned earlier that they were so overdone that I thought that they were going to rally, but I was not sure if they were going to sell off more and then rally, or if they were just going to rally. And they had a good pop on the report, and then you know, a little one minute pullback. I got in during the bar as it was forming. I didn't even wait for didn't even place an order. Did not enter above it. I just entered during the bar. Okay, a couple more good bars. 42, 43. I think that again reaffirms the always in up premise. Slightly higher high here, 45. You know, you could argue shorting a new high on possible trading range day. 46 is a bear bar. I personally would not do it. I think always in is up, and you know, I think that we're probably going to have a breakout pullback and more up. 47 is the breakout pullback signal bar, has a bear body, which is not ideal. 40, I would not short below 48. You can argue that it's going to be a lower high, but to me, even if the market sold off, it would just create a second entry breakout pullback long. The market broke out from this bull flag with a lot of force, so it should have more up. What I don't know is if the pullback will have just one leg or two legs. Buying above 49 is a high 2 at the moving average, but it's buying a little bit high up in the pattern. Okay, bear inside bar at 52. I think there's too much momentum up to be shorting this. You know, you can make the argument that it's a wedge bear flag. You can take your pick. You know, 33, 35, you know, 38. You can call any of those a first push up. I would consider taking a second entry if it looked good, but at this point, I think the momentum up is good, and we should have more up. 42, 43 is pretty strong, and I doubt that it's going to reverse just on a single push up from the 47 breakout pullback. Okay, there's a second attempt to go short at 54 at a new swing high. I personally would not short that. To me, I think buying below these bars makes more sense. You know, the strength up from 42 is pretty good follow through. 49 up. If it turns into a top, I'll short lower, but to me, I'm just looking to buy. 2-bar reversal at 56, a high 2 at the moving average. The market should go up. We haven't had any nasty trap yet. A lot of times between 10:30 and 11:30, traders get trapped in or trapped out. So I'm a little vigilant. I'm wondering if that will happen here. I bought and I get out with, I forgot, like, I don't know if it was break even or with 1 tick or something. And that was kind of dumb on my part. I should have kept my stop below the signal bar, or at least below the entry bar. Market didn't care. Gave another breakout pullback at 60, and of course it's a bear body, so it makes it a little bit hard to get in. Market ran up to 63, testing the high of the day. The bears will see that as a double top bear flag with 4 after the sell-off, and they'll also see this as 2 legs up from the low of the day. The legs were complex. The first leg up to 29 or 32, that area, had subdivided into 2 legs. And then the current leg is a spike in channel. This is the 3rd push up after the spike. You know, the spike oftentimes is the first push, and then you get 2 more pushes. A lot of times you'll get a 2-legged correction from this. And you got an II, and I think it's an okay swing short below 64, but I wouldn't scalp. You know, way too many bull bars in here. To me, there's just not enough selling pressure since this rally began. You know, I'm always looking for buying pressure and selling pressure, and in the absence of much selling pressure anywhere in this area, I think that the bulls are still in control and that they'll be buying pullbacks. Pretty decent sell-off, an II at 72. I think nothing in that sell-off makes the market look always in short, and therefore it's always in long. Possible double bottom bull flag with 56. I'm not shorting below the II. I think there's a pretty good chance it'll be a final flag. The market reversed outside up. I think it's risky to buy above it because a lot of times there's a pullback when you have 3 or more large overlapping bars forcing you to buy at the top. The pullback is the 75 inside bar, and then the market ran up again. Nice buying with 76, 77. Market tried to reverse 78, and I personally would not short below it, even though it's a triple top. It's just too much upward momentum and not enough selling pressure. And I would not buy above 79 in the final bars of the day, and that's where we ended up. Again, yes, we've had 3 pushes up on the day. Arguably, it's a spike in channel, the spike up to 34 or so, and then 2 more pushes. But no real selling pressure. There's a little selling pressure from 64 down to 72-ish or so. Going into tomorrow, you know, this trading range may expand. The bulls see today as a bull reversal day. It sold off and rallied into the close, and it closed above the open. So in the daily chart, that creates a bull reversal bar. But you know, I'm almost certainly tomorrow is going to trade above today's open. But I personally, if I were trading the daily chart, I would not be buying this. You know, it's a breakout pullback. It's a high 1. I would wait. I think the bull has lost steam over the past 4 days, going a little sideways, and I think it's not a great-looking high 1. So tomorrow we've got a bull channel, bear flag. I'm assuming that we'll trade back down somewhere in the middle here, you know, 23, 26 area in the first hour. But I also think we'll trade above today's high at some point tomorrow. And as far as follow-through goes, I don't know. I think the notes traders will be buying pullbacks on the notes. So same with the bonds. So even if it pulls back down in here, I think there'll be traders who will buy down there, expecting a second leg up. And here's note the bonds strong spike. The market may come down here and test the bottom of the channel, and possible double bottom bull flag for a second leg up.